Thank you very much, Matt. That's the best intro I've ever had in my life. And Ray, if you had any hang-ups that you might look foolish on stage, you were fantastic, but I'm making up for you. So you're doing fine. As we're talking about tax and paying less tax, it's about putting more money into your pockets. So I'd like you to reach into your pocket, your handbag, your wallet, or wherever you keep cash, pull out a cash note and hold it up high for me, please. That's an instruction, by the way, so you got to find some cash.
Did you take plastic?
Cash. Now this is really going to show me who the cheapskates are. Come on.
This is my other cash. This is my cash. That's my cash.
Are there any...
Holding it tightly.
Can I have a look at this?
Yeah, of course.
Well, your good name is?
Fuse.
Firoz, thank you very much. So this is a £10 note, Firoz, and it says here, I promise to pay the bearer on demand the sum of £10. So if I took this to the Governor of the Bank of England and said, here you go, can you please pay me on demand? What would he do? Sorry? He might do, but what? Sorry?
And then you will deduct tax and then give it to you.
No, he'd give you another £10 note, wouldn't he? Or coins or whatever. Because this is not real money, it's fake money, it's just a piece of paper, isn't it? Really? It's a promise, isn't it, to pay the bearer upon demand. So if I get the piece of paper and we burn it, the plastic doesn't burn. Plastic doesn't really burn too well. So that's your £10 note for us. I hope you're glad you came. But what's really interesting is everybody else who put their hand up has put their note back in their pocket or in their lap. And that was not the instruction. So we're very keen to guard our money. When we see that there's danger, we might lose it for us. But you're probably paying a lot more tax than you need to. But because you can't see that, you seem to be continuing to do it every single year. Don't you? Yeah? For us, I know your mind's somewhere else, but everybody else, stay in the room, please. Davinder asked me a question earlier on, so we've never met. He thought my name was Mo. I have no idea where you got that from, Davinder, but I can be Mo if you like, if you give me a tenner. And his question was, he's an investor. The return he makes on his investment, is it income or is it capital gains? Was that the question, Davinder?
Yeah.
Okay, so I'm going to show you how to make it better than both of those. So this is what you do. When you invest money with a developer, what you do is this. They form a limited company.
Yeah.
You subscribe to the shares on day one. Okay? So you get the shares on day one. You then become what?
Shareholders?
An investor. No, but there's a reason why I've used this particular word. There is one, and I'll come to it in a minute. So you become an investor, and you can claim investors' relief. Has anybody come across investors' relief before? 1, 2, 3, 4, a few. Okay. So you invest in the project. You get the shares on day one. You keep your money in the company for 3 years. After 3 years, you take out your money with your return and you pay 10% tax. So all the developers in the room should be thinking about how do we encourage investors to give us their money and show them that they are only going to pay 10% tax. You've got to leave your money in there for how many years?
3 years.
3 years. How long does the average project take?
18 months.
Stephen says 12, 18 months. So let's call it 18 months, worst case scenario. So how many projects can we do in 3 years, Matt?
3. 2.
English was his favorite subject at school. So you do 2 projects with the same investor, saves you looking for another investor on the second deal. At the end, they only pay 10% tax, which is the lowest rate of tax you can pay. Happy days. You then can go back to the investor and say, why don't you do it again and again and again? Because every investor has a lifetime limit of how much? There's a few people who said, how much? 10 million pounds. You got 10 million pounds that you can take out and only pay 10% tax. Is that good or is that good?
Yeah, very good.
You don't sound too...
Yeah, normally they want to close the company down, you see, don't they, after each development?
You could do, but you have a challenge with that, and I'll share that with you in a moment. For us, is that good or is that good? Is that worth £10? Good. So, if you don't do this, and you have an SPV, and you do a project, and you've got, say, £2 million in there, and you liquidate, you can take your money out if it's a trading company, yeah? So you're a developer. You liquidate, you take your 2 million out, you pay 10% tax, but this time you claim another relief which is called entrepreneur's relief. And the lifetime limit is how much? 10 million, yeah? So there's two things you should be thinking about here. The first one is everybody's got 10 million for entrepreneur's relief and 10 million for investor relief. Okay? So you got 20 million pounds to go at lifetime. So this is for Stephen, and if he has a partner, a husband or a wife, or a boyfriend or girlfriend, you got 40 million. And if you take 40 million out and pay 10% tax, how much tax have you paid over your lifetime? 40 times 10%. 4 million, yes. Good. At least you're £10 safe, though, isn't it? The problem is this, Devinder. When you liquidate, you cannot go back into the same trade or sector for the next 2 years. Anti-avoidance, okay? It's called the TAR, the Targeted Anti-Avoidance, okay? So you don't have to liquidate with the investor's relief. You just do it, leave your money there for 3 years, as long as you subscribe for the shares on day one. Happy days. You cool with that?
Yeah.
Happy?
Yes.
Any questions? While he thinks about it, we'll move on and we'll come back to you, okay?
Yeah, okay.
Jay, you were talking about VAT. Where's Jay gone? Okay. So, if somebody buys commercial property, is Tony here? Tony, are you buying commercial property?
Yeah.
How much are you buying it for?
It's transfer of going concerns at the
Oh, you just answer the bloody question. You're buying a commercial property.
Yeah.
How much are you paying for it?
600K.
600k. Does it have VAT on it? Okay, so some commercial property has VAT on it. It's called an option to tax. That means the previous vendor or somebody before him or her refurbished the property, usually, and they claimed back the VAT. And HMRC say you can have the VAT back. There's two things you have to do. One is charge VAT on the rent, and when you sell the property, charge VAT on the disposal. Okay? So on 600 grand, if you're paying 20% VAT, Joshua, how much is that going to be? Yep, that's right. You said it without moving your lips. £120,000. You are good. Really good. So you've got to pay £120,000. There's two ways to escape this potentially. The first is, like Tony said, transfer of going concern. So if you have a tenant in the building, do whatever you can to keep them in the building. If you do that, you do not pay this under the TOGC. And what's the benefit of not paying the VAT? Really? Cash flow. Okay, so cash flow, interest, okay, arrangement fees, and then it's a bit of a ball breaking exercise, which is a technical term for it's really hard work to get the money back from the HMRC sometimes. Okay, first thing. Second thing is you do not pay stamp duty on the VAT. If you pay the VAT, you've got stamp duty on the whole lot. If you don't pay this, you're only paying stamp duty on the £600,000. Your second option is if you're looking to convert the commercial property into residential, then what can you do?
1640.
Yes. So you got the VAT 1614D. You do that, you don't pay VAT, you save the stamp duty and everything else. Now you convert into residential. What rate of VAT are you going to pay on the conversion? 5%. If you subcontract the labour, but you want to be a real smart arse, that's a technical term as well, by the way. You want to be a real smart Alec, and you say, I will buy the materials from the merchants myself. Are you going to pay 5% or are you going to pay 20%? 20%. You're going to pay 20%. So it's probably a good idea to outsource the whole lot if you can. So you pay 5%. If you sell the units, can you claim back the 5%?
Yes.
Okay, so on sale. If you keep the units, can you claim back the 5%?
If you sell it to another company, you can.
Yeah, but if you keep them.
Don't try and catch him out, he's being filmed.
So everybody says no. Who says no? Raise your hands.
Yeah, if you keep
So you're saying you can't claim back the VAT.
If you keep.
If you sell,
No, if you sell them,
you can. And if you keep, you can't. So PD says you can't claim back the VAT. Everybody else thinks we can. Really simple question, guys. A yes or a no. If you keep the property, can you claim back the 5%?
No.
No. So does anybody think yes? Raise your hand. No. So everybody says no. I'm afraid to tell you guys, you're all wrong. You can. So this is what you do. SPV1 owns the asset. You form company number 2. Company 1 grants a lease of longer than 21 years. Okay, and then you claim back the 5%, and this becomes the managing agent, okay, or the lessee, yeah. So you claim back the 5%. So you got 5% extra in your pocket. In your case, Tony, on that 600 grand property, how much will it cost you to convert?
400k.
So you could potentially be 20 grand better off if you keep all the units, okay, which is 5% of the, yeah. So you could do this. Can anybody see another problem? When you grant a lease, you have to pay something. Stamp duty. So usually you pay stamp duty when you have a lease, but because it's a wholly owned subsidiary, you claim group relief. And no stamp duty to pay. Okay? That's not bad, is it? Is that good or is that good? Good. Cool. Going back to Tony. Tony buys the property. Let's say he's in service accommodation. When he buys the property, what can he claim on the property? Capital allowances. Okay? It depends on the size of the property and what it has in it, how much you can claim. But for our purposes, let's say it's a 20% claim. So on 600 grand, he claims 20%. So he's got 120 grand. Then Tony refurbs the property and spends £400,000 as we've established. We go in there and say, okay, there's another £200,000 worth of capital allowances on the refurb. In total, Tony's got £320,000 he can claim. So when he makes profit, Tony makes profit in his service accommodation business of 200 grand in the first year. On the £120,000, he can write off 18% every year. So it's reducing balance. 120, 18% is used, the balance is carried forward. Okay, so we'll call it 20%, which is going to be 24 grand. Yep. In capital allowances, the rest he carries forward. On the £200,000, he can claim the whole lot in the first year. He's got two options. He either claims the balance and carries the rest forward, or he claims the whole lot. This is the beauty about claiming the whole lot, Tony. You claim the whole lot, you've made a taxable loss. For mortgage purposes, business purposes, banks purposes, you've made a 200 grand profit. For tax purposes, you've made a taxable loss. You can carry that loss forward. Here's the real big benefit. If you do that through a limited company, okay, when you take that money out, you're going to have to pay what tax? Sorry?
Corporation tax.
No, because the company pays corp tax. When you take the money out, what tax? You pay income tax, okay? You don't pay income tax. But if it's an LLP, for example, this money is in the bank, you write all this off, you pay no personal tax, yeah? And you can do whatever you like with the money. So it's worth you thinking about, if you're going to have a large capital allowances claim and you're going to buy more commercial property, let's say you're in service accommodation, is it worth you running an LLP or a sole trader or a partnership? The answer usually is yes. You'll get to a stage at some point in your life where you stop buying buildings, you've used up all your capital allowances, then you start paying tax. Yeah? If it's in a limited company, that money is ring fenced, you can't use it personally. LLP, sole trader partnership, you can use it personally. So it's well worth you thinking about that. Any ways of saving VAT on what, sorry?
Saving VAT as far as service accommodation is concerned.
So if your turnover goes over the VAT threshold, you've got to pay VAT on your income. Then you can claim back any expenses where you've paid VAT.
On refurb costs, sorry. On development costs, build costs.
Yeah, we've already covered that.
Watch the video tomorrow.
Yeah, we've already covered that.
Can you use capital allowances somehow in PDs? Mr. Dance, buy a PD, develop it. So you're not going to hold people to develop it. Does that apply? Capital allowances?
You can do. The problem is this. You claim capital allowances on capital items, which is a fixed asset. When you refurb it, it becomes stock. You can't claim capital allowances on stock. So you have to make an adjustment. Yeah? So when you make an adjustment, then you lose your capital allowances. So yeah, you can be clever and claim some.
Yes, that's what. Yes.
Yeah, so you can claim some, but you can't claim the whole lot. So this example here.
Is it things like existing lifts and things like that?
Yeah.
Aircon.
Yeah, or anything which is fixed to the building. So the heating system.
I'm buying an office building, so
Yeah.
it's got lifts and plant and all that sort of stuff.
Yeah. So there'll be loads of stuff that you
Yeah.
can claim. All of this stuff here we would say are capital allowances. Fire alarm, smokes, okay, camera system, heating, the whole lot.
Yeah.
Yeah.
So how does that work?
Watch the video, I've just kind of explained it.
No, you said you couldn't do it if you're developing it. 'Cause
You can claim some of it,
some of it. Yeah.
but you can't claim all of it, because when you buy the asset, on your balance sheet, you've got something called fixed assets, yeah? Anything which is a fixed asset, you can have capital allowances. But when you refurb the properties, then they become stock. They become stock because you're looking to sell them, aren't you?
Yes.
So it's a stock item.
Yes.
When something moves from a fixed asset to a stock, no capital allowances.
Right.
So in between, there could be a claim. If you rent the building out for a short while, there could be a claim. Other than that, no claim. Yeah? Most people miss that bit. Matt?
How long has it been possible to claim capital allowances for, and how long might it be possible to continue doing so?
It's been around for a long time, and it's going to continue on for a long time. Yeah. But most people miss out because they don't know about it.
No, and this helps you out with the competition.
Yeah.
It can only be claimed once per building, can't it?
Once per building. When you buy the building, when you refurb it, then you've got some more. And if you keep refurbing or spending more money on it, you've got more.
So if you leave it untenanted, who then makes the judgment whether it's stock or not?
When you refurb the property and break it down into different units, okay, then it becomes stock if you're looking to sell them on.
And who makes the call on whether you're looking
That's based on your intention. So you've got two options. You've refurbished a commercial property into separate units. There's two things you can do: sell or hold. If you hold on to the property and rent them out as individual units, no capital allowances, because there are no capital allowances on residential property. Your other option is you sell, or you intend to sell. If you intend to sell, it becomes stock, Lara, so no capital allowances. Yeah? The best way to use them is in serviced accommodation. That's the best way, because it's a trading business.
Is there a minimum period where you have to rent it out in? Or can you just do it for a month and then give it to yourself?
Yeah, a month would be a... Is that camera on? You might want to rephrase that question. Yeah. A month is too short. It has to be a longer period, and it depends on your intention. Yeah. I think my 20 minutes are up.
There's one last question. Who owes Farouz a tenner? Me or you?
Well, I was thinking of, I would have given it to Feroz, but because you've been a really good sport, Feroz, you've doubled your money. Give him a round of applause.